Hey everyone, and thanks for jumping back into the cryptoverse. This is NFA Live. Again here on Thursday. We have Guy from Coin Bureau. How are you doing?
Good, thanks, Ben.
And Rob from Digital Asset News. How's it going, Rob?
Good, good. Thanks for having me.
Looks like Rob's background has changed once again.
It's relatively inexpensive to do a new green screen on Fiverr. Very cheap. I recommend them.
It's nice. I like it.
Has your background changed too?
I've used this. I've used this green screen a few times. So yeah, it's just a green screen of my living room here in Dubai.
Very nice.
Well, it's interactive too.
Yeah. This is actually very expensive. You had to pay quite a lot of money for the interactive green screen, but I'm sure you guys can agree it's worth every penny.
Oh yeah, when you upgrade from Fiverr to Tenor, it's definitely very, very nice.
Well, we have a lot to talk about this week. I think last week it was right before the spot ETF was approved for ETH. So we'll talk about that and a few other things. So why don't we just go ahead and jump in? So I guess last Thursday we were all sitting around wondering what was going to happen with the spot ETF. It seemed likely that it was going to be approved based on what everyone was saying, but it was still, nothing is a sure thing. So it's been approved now. Are there any more hurdles? Like, I guess my question is like, what's the next step? What are we waiting on? They're approved, but they're still not listed. So as much as that's great, right? You still can't actually go out and buy ETH through the spot ETF yet. So any idea what the timeline on that could be? Rob, I'll start with you on this one. I know you're the leading expert on the ETFs.
even the
Is he out or is that just me?
No, he's out. He's out. Right. He's frozen.
Yeah, Rob, I think
he's been censored. The world isn't ready to hear his opinions on the ETFs.
All right, Rob, you're back, Rob.
See, even the internet doesn't want to have my opinion on ETFs.
I will say, if the internet keeps going out for you, just turn your video off, and that should speed up the rest.
Gotcha. All right. So, ETFs. It's a good thing you started with me. I'm an expert on these things. I mean, pretty good track record, and I will just say that with what's happening, I know that this wasn't approved by Gary Gensler and the rest of the crew over there. It was by the committee. I thought they had 10 days to actually take a look and overturn, but it looks like they're not going to. There was a request for S1 filings to be updated, which it looks like BlackRock and the other ones will probably roll in as time goes on. But I mean, it looks like if the people that were actually right on this one, Balchunas and Seifert, they seem to predict that it's going to be in the mid-June time frame, which I got to tell you is extremely it's extremely fast in 2 weeks or so. So it doesn't look like there's many hiccups to come about. And I got to tell you, if it's one of those things where, like, everybody who held onto their Ethereum and maybe didn't sell their Ethereum for some meme coin or something like that, congratulations, because that's what conviction looks like. So looks like things are on the up and up. I'm pretty happy about that.
Yeah, I think a lot of times it seems like right when everyone's worried about an altcoin flipping ETH then kind of takes the reins back and takes some of that market share. Guy, what are your same thoughts as Rob on this one?
Yeah, I guess if the Bloomberg guys are saying sort of mid-June for the timeline, then I'm sort of I'm loath to go against what they say, because they're the ETF experts after all. That's literally their job. So although, I mean, as I understand it, I might be wrong on this one, but I know there were some bets placed on Polymarket as to whether these ETFs would be approved. And then when they got approved, the people who lost the bet actually disputed it, or some of them did, because I think the argument was that actually, I think, was it the 19B4s or whatever that the initial forms were, they were approved, but actually the ETFs themselves aren't officially approved until the S1s are. And the S1s are obviously, they're being submitted, and now there's going to be this kind of comment period, I guess, which is what we what we saw with the Bitcoin ETFs. There was a fair bit of back and forth, and maybe that ground has already been trodden, and there won't necessarily be, there won't need to be such a long back and forth between the SEC and the various issuers. So that could speed it up. I do wonder, though, whether the fact that we're now heading into summer, I don't know whether the kind of summer holidays, the sort of slowdown there may kind of hold the process up a little bit. I don't know whether I think it's the SEC's corporate finance division, isn't it, that has to deal with all these. So I don't know how much work it's going to be for them to dig through it all. I don't know whether they're going to be sort of fully staffed because of the summer. I was something else that occurred to me as well. I don't know if this will have any bearing on it whatsoever, but it might. I wonder, how low must morale at the SEC be at the moment? Like, it's been sort of basically, it seems, coerced from above to change its position on these ETFs, on these ETH ETFs. And it's just had another loss in this debt box case, wasn't it? I mean, it was a fairly paltry fine. I think less than $2 million they had to pay for the debt box scandal. But they've taken an L on that. They've obviously had a whole load of other L's this year. It hasn't been a good year for the SEC. And their in tray is full. They've got all these lawsuits out against various crypto companies, and Gary Gensler himself, it seems to be under a lot of pressure, under real fire. The whole anti-crypto army is sort of coming under fire. So I do wonder, how demoralized the SEC may or may not be, and whether that will contribute, whether that will have any bearing on how long these things take. So I don't know. Like I say, if Balkunas and Seyfarth, the Bloomberg guys say, another month or so, or another couple of weeks. I mean, we're nearly into June, aren't we? If that's what they say, and then I'm tempted to agree with them. But if I had to guess, I would say I think it may take a bit longer. I think it could be sort of towards the end of the summer, perhaps. But does it really matter? They're coming, and they'll be with us. They'll be with us in time. And what's really important, I guess, is what the inflows are. That's going to be the real test. Right. We seem to have got over the really big hurdle.
I guess it sort of leads to the question that would sort of almost lead to even more losses for the SEC, and that is, well, we have the Bitcoin spot ETF approved, and I feel like they basically had to approve that one. I mean, I guess they didn't have to. They've actually rejected it for years, but based on the pressure and the fact that Bitcoin really was a commodity, there wasn't really a great reason to say it was security. It seemed like, hey, this is going to be approved, and just go ahead and approve that one, and you'll get people off your back. Now that they've approved the one for ETH, what legal framework do they even have to not also approve spot ETFs for every altcoin down the line? And I guess I'm curious, is that where this is going to head next? Like, people filing for ETFs for, like your Solanas, your Avalanches, that Polkadot, like, is that where this inevitably leads? And I guess, what are the chances those end up getting approved? Rob?
I'm just waiting for the Pepe ETF so I can finally get in.
Can you imagine, like, Gary, like, reading over that ETF? The application.
It's
wow.
That's just the nature of the beast. I will say, I think it all comes down to demand, right? I don't know how much demand there is for Pepe ETF besides me, maybe Guy asking for the and well, of course, Ben is going to do the S1 filings, but like I think the big question is, what do the institutions really want, and how are they going to put it forward? So I think the next obvious choice, and if people have been talking about this, is Solana. If you take a look at the inflows for institutions, it seems like that's the next one. And then I'm here at Consensus. I was listening to Kathy Wood's talk yesterday, and she talked about Solana being one of the chosen ones for the next ETF. She also talked about the reason for this Ethereum ETF was very strange and very odd, is she's never seen it like that. And really, she said it comes down to a political football. And because of the fact of the wranglings and the different percentage of people who are looking for the next presidential election, who they're voting for, you can see that there's a clear shift because there's so many different crypto users, especially in the United States. I just heard a statistic, which is crazy, that people in the United States, we love dogs. People in the United States, we have more crypto than there are dog owners. And I'm like, well, that's 50 million, maybe 75 million plus. So I think that's going to be the big issue. And I think that's why you see it. And I just saw that the Biden administration, for their campaign management, they actually put out feelers to ask people what they thought and how they could shift of their crypto agenda. And that's the Biden administration re-election committee. So if you don't think it's a big issue, it's going to be a huge issue, I think, in November.
Yeah, I mean, it seems like it is becoming a more political issue. Guy, what are your thoughts? Is this just kind of a stepping stone to the surge of altcoin ETFs?
I think it's a stepping stone, but I think the gap between this stepping stone and the next one could actually be quite wide. I think there may be, because I think there are two things that give me sort of pause. I mean, I absolutely agree with on the whole sort of business of like Solana being next. Like that seems to be the natural one. Institutions love it, and that seems to be where the momentum is. But I think firstly, something needs to be done about, some sort of resolution needs to be reached on this whole security status. Like, obviously, there was talk about whether ETH is a security, and this, I'm sure there are plenty of elements within the SEC that would continue to argue that ETH is a security. And obviously, Sol falls into the SEC's definition of a security, along with a whole bunch of others, and those definitions underlie, these cases against Binance and Coinbase, which are ongoing. We don't know yet whether the SEC is still planning to sue Uniswap and Consensus. So there's a whole load of, I think there's a lot of legal barriers. There's a lot, we need some clarity around definition to start with. So I think that could be a hurdle. Also, as well, in the case of Bitcoin and Ethereum, BTC and ETH, they both had regulated futures products on the CME for several years prior to sort of any talk of ETF list, of spot ETFs at any rate. Obviously, and I think there's also the case that they both had futures ETFs long before spot ETFs were talked about. So, and the CME, as I recall, has said in the past that it doesn't have any intention at the moment of listing futures products for Sol. So, I think unless the game has changed so much, unless the process has changed so much that they decide to, that you don't need to have a regulated CME futures product in order to then progress on to an ETF, which seems to have been the way. Then if that process is still in place, as it were, then I think there could be a big gap, because obviously we don't have the CME does do reference prices for Sol and a handful of other altcoins, but there are no listed instruments as far as I can recall. And it's been like that since 2022, and I don't think there's been any further progress on it. So I think there's a lot of work still to do, perhaps in that direction. So maybe, although I think ETFs for other cryptocurrencies, for other major cryptocurrencies, are inevitable in the long run, I think it still could be a while if that current process, CME, futures ETFs, etc. If that process holds, then I wouldn't be holding my breath on those.
Yeah, I mean, I would tend to agree with you. It's just I was a little surprised by how quickly the one went for ETH. Like, who knows? Maybe the SEC will surprise us and get it out a lot quicker. But yeah, no.
Yeah.
I mean, I think I was sort of thinking the one for ETH probably wouldn't be approved until maybe like next year. Just given how long we had to wait for the Bitcoin one, I figured, hey, it's probably going to take a while. But then they did a complete, 180 on the whole thing.
Yeah.
So
maybe the game has changed. Maybe we're playing a completely
right.
different game now. It's more than possible.
We've spoken about obviously like Bitcoin's dominance market share going up for the last few years, but I was sort of looking and maybe the real story was NVIDIA dominance all along, because I was looking at this and it's kind of like the same idea, right? People are just sort of migrating to the sort of the blue chips, if you will, the ones that have the among the best cash balance, the balance sheet and all that stuff. I was looking at this. So Bitcoin, despite the fact that Bitcoin has gone up like 4x, it went down 87% against NVIDIA since 2021, which is a crazy number to think about. I mean, it's up a decent amount over the last year at least, but it's still down 87% against NVIDIA since 2021. So I'm kind of curious about what your thoughts are on the AI space in general. I mean, you could always talk about AI and crypto as well. Is it kind of here to stay for a while? Are we getting ahead of ourselves? What are your thoughts, Guy? I'll start with you on this one, because I mean, I know you guys have been interested in some of the AI space within crypto, right? But yeah, I'm just curious what your thoughts are here on the AI space, because it's been doing pretty well.
Yeah. I can't quite shake the feeling that we're in the sort of, that it's kind of analogous to the .com bubble in a sense, that this new technology has emerged. People are waking up to just how revolutionary it is, but we're still in the very early stages of it. This is true, and this is reflected, I guess, if you like, in crypto. So many crypto projects are being spun up, bung AI on, in the ticker or in the name of it, and all of a sudden, you've got something that people want to ape into. And beyond that, beyond crypto itself, AI is just getting talked about everywhere, isn't it? And it does feel like we are sort of slightly in a bubble with it. And just the speed of progression has been pretty scary. And then there's a sense I get that everyone's just sort of fumbling around. I mean, I think this business with OpenAI and Scarlett Johansson, this business of Scarlett Johansson's voice, I thought that was using it basically without her permission, having sort of asked her if she would, and then she saying no, and then them just kind of doing it anyway. That for me was it was so stupid, but that for me kind of said, like, this is just the stage we're in. Everyone's just fumbling around in the dark, just moving fast and breaking things, and sooner or later that is going to have to resolve itself into something more coherent, and maybe that will take the form of the bubble bursting, and we're left with a handful of AI companies that really are genuinely offering a great product, offering actual AI, because a lot of this, I think, is if you dig into it, is AI. The AI part of it is all a bit sort of suspect, really, because a lot of it is just using large language models. And I've spoken to a few people who've sort of dug into, have been exploring AI and what it can do for their business. And when they sort of dig into it a little bit, what they realize is that actually the AI component is people taking data, and feeding it into one of these LLMs. And it's like, well, that LLM technology has been around for a long time. That's nothing new. Where's the actual artificial intelligence of this? And again, that says to me that we don't really know. The whole sort of space, we don't know which direction this is going in right now. All we know is that it's an incredible technology that's only going to get better. But what sort of form it's going to take in the coming years is kind of anyone's guess. And I guess my I reckon that we'll probably find that out the hard way, the same way we did with the .com bubble. And I think that will be true in the crypto space as well. I think 99% of AI themed crypto projects will turn out to be just complete vaporware or nonsense. But there will be a handful of them that are using AI and are doing something revolutionary, and those will be the winners.
Right.
But yeah, I mean that's just sort of thoughts on AI in general, and of course Nvidia is riding the wave better than anyone because it is selling picks in a gold rush, isn't it?
Mm-hmm.
Yeah, no, I mean it's I mean if Bitcoin is bleeding to you to the tune of 87% over 3 years, then you're doing something.
Yeah.
You know, that's bringing in the money, because it's not like Bitcoin has been sitting still. You know, it's been doing really well. There's two things that I saw about this. One was Druckenmiller. He sort of equated it to sort of the .com era, but he said he doesn't think it'll be as bad. And I kind of see that too. But he also said, you know, like in the short term is probably getting a little overhyped, but in the long term, he actually thinks is being underhyped. I'm kind of like, you know, I definitely like the idea of AI, and I've seen some of the benefits of it. I saw something funny though. Someone said, you know, the biggest success was rebranding linear algebra as AI.
Funny. That's king marketer right there.
Yeah, I know. Like the best marketing scheme in history is rebranding linear algebra.
That's good.
But anyways, Rob, yeah, it's genius. Rob, what are your thoughts on it?
No, I mean, I agree with everything the guy said. It's going to be a roller coaster, and we're gonna see a bunch of rug pulls and nonsense and everything else. Trust me, the consensus right on the street. There's a lot of different things that are going on there, and I'm like, that's not gonna really make it, is it? But yeah, with Nvidia, I'll just refer back. Actually, I'll refer back to a post that guy put out, and it said that Nvidia. I mean, not just the 80. What was it, Ben? You had 83 or 87%.
87%.
Yeah, a guy put out one like 3 or 4 days ago. It says Nvidia outperformed Bitcoin over the past decade with a 21,558% return compared to Bitcoin's 13,048% return. So just imagine that. I don't think that's just. I mean, that's obviously not sustainable as we go forward. But I mean, it is pretty impressive in where things are going. As far as like AI, I mean, I don't. It's just another gamble to do those things. I really don't have too much to say about it. I think that if you believe what Sam Altman says for ChatGPT, that the whole game is all compute power and the GPUs and electricity and everything else. If you look towards that, just take a look at the projects that are going to optimize the compute power of the GPUs, and those would be like the Aethers and the Renders and the IO.net. But other stuff, very risky. But I think it is the future, but we'll see how big it is.
Yeah, I think that's a good point, Rob, about, you know, optimizing electricity, you know, because where is the power for all these chips and the data centers that they're in? Where's all this power going to come from? Because you know, we've already got a fairly sort of messed up energy market as it is, you know, in a lot of places. I mean, I think in the United States it's not quite so bad, but energy markets elsewhere, some of them are in a real mess, and investment in things like oil and gas has been limited over the last few years because of the sort of drive for renewables, which have had sort of mixed success at best. But like one of these Nvidia chips uses the same amount of power as an American home. It's like, well, that's, you know, who's going to pay for that? Where is the power to run those things going to come from? Which makes me think, and also the actual commodities to build them. So I do wonder whether maybe investing in AI is one way to do it. But like, I think there's going to be a lot of opportunities in things like investing in electricity generation and rare earth metals, you know, commodities and stuff, just to kind of sell the picks in the gold rush.
A commodity super cycle.
Yeah. Which is apparently going to be very good for BRICS countries because they tend to be commodities exporters on the whole.
I think the thing is like, you know, people talk about reaching a singularity, and that will be. I feel like there's two opinions on like sort of reaching a singularity, right? Where we make AI smart enough that it can then, you know, exponentially make itself smarter and smarter and smarter, and it just gets out of our hands really quickly. But I've seen a lot of I've seen a lot of drama. I don't know if you guys are looking at all this drama on Twitter, but I mean, there's people that have been leaving certain places and kind of talking about, you know, what's going on. And, you know, there was some discussions about when we're going to hit like artificial general intelligence, AGI, and people sort of speculating like when, and that's different from like, you know, the super intelligence, but people sort of speculating on that. And, you know, there's one school of thought that says that some people left because they're worried about the safety protocols, and, you know, there's not enough focus on the safety around it, and they just want to get out before that. And then there was someone else who it was funny because I don't really even think anyone was really thinking about this, but then someone else came out and said, well, you know, what if the reason they left is because they realized that we're actually nowhere close to AGI, and, you know, it's being overhyped way beyond, you know, where it actually is. And maybe we're still actually 10 years away from, you know, from that, but it'll be interesting to see where it goes over the next 10 years.
Or maybe just like Elon Musk says, we're actually just all in a simulation. And right now there's somebody out looking in and laughing their head off going, these guys think this is actually real. So who knows?
Yeah.
Yeah.
Would it be so bad? I feel maybe if we are, say, actually 10 years away from AGI or 20 years or whatever, maybe that's a good thing, because I kind of get the feeling that if we were, say, 1 year away from it or 6 months away from it, we're nowhere near ready. I mean, I think that the discussions around the ethical and legal ramifications of all this, you know, they've barely started. Like, so if we got AGI, you know, too quickly, maybe, you know, we just wouldn't be able to handle it. So maybe I kind of hope maybe it is 10 years away. It gives us a bit of time to get the house in order.
I can see that. Yeah, we actually had a discussion about this too, about the comparisons, like you talked about, Guy, the .com era, and how when the internet came through, it was going to wipe out all these jobs and everyone's going to be out of positions. And then now we do the same thing with AI. But then some people say, well, you know, even if the robots are built and they come through, who fixes the robots? Right. Well, at first it'll be the people, but then as time goes on, the robots will fix the robots, and that'll be it.
I think like kind of like when the .com era was around, or people were saying, well, now that the spreadsheet has been, you know, now that, well, I mean, I guess it wasn't just the .com, but once the spreadsheet was invented, you know, once you had your like Microsoft Excel and all that stuff, a lot of people thought that, you know, it would basically destroy tons and tons of jobs, like people who would just kind of keep track of that stuff manually. And it did, but it also created a lot of new jobs that we weren't even thinking about. I mean, like, it's not like people were back then were hiring people to, you know, like code up spreadsheet stuff with, you know, Visual Basic. You know, I mean, that wasn't something that anyone knew was possible. And then now that's a legitimate thing that, you know, there's so many things you can do with this, but you have to be an expert in your field to be able to do some of that stuff. So I think it probably will take away some jobs, but it could also lead to sort of the creation of like a new class of jobs that we're just not even thinking about yet.
Yeah, exactly.
Or maybe make everyone so much, or well, probably not everyone, but make a lot of people so much more efficient and effective at their jobs that, you know, that creates a whole load of value. You know, that sort of spurs growth, because we're much more, you know, we're able to sort of outsource all the really boring, tedious, repetitive stuff to the AI and focus on, I don't know, focus on the really interesting stuff and be more productive as a result. I mean, I guess that's the sort of, maybe that's the slightly too utopian vision of it, but yeah, definitely there'll be jobs destroyed.
Someone says, but who's going to fix the robots that fixes the robots?
That's going to be our job.
All right, next question. We talk about this a lot, but I just can't get over, you know, you have Bitcoin essentially at all-time highs. I mean, it's not that far, you know, it's basically at the highs from the last cycle. You have Ethereum not that far away from all-time highs. Obviously, a lot of the altcoins still are a long ways off, which is always the case, right? I mean, Bitcoin always is, among the first to get to an all-time high, and it takes everything else a lot longer, at least the things that are going to make all-time highs. Some things obviously won't. But is this just like an institutional driven rally? Because it still seems like people really aren't here. It kind of seems like there's not a lot of interest in crypto. I mean, there certainly is in some circles, right? Yeah. But I mean, I'm still looking at, YouTube and Twitter stats or X stats and even if you look at like, Google Trends and stuff in crypto, like we're just nowhere near where we were back in, in 2021 or 2017. So is this just like an institutional driven rally at this point? I mean, what are your guys' thoughts on that, Rob?
Yeah, I mean, it's institution driven because we can take a look at the Bitcoin ETF, and congratulations to BlackRock. I think they just passed grayscale as far as the number of Bitcoin being held as of Tuesday, which was inevitable. But actually being here, boots on the ground, a consensus, I will tell you all the stuff that people when they come up to me and talk to me, they're not talking about DeepIn. They're not even talking about AI. They're not talking about Web3 gaming. They're like, did you see Mega meme coin? How much it is today? Did you see Bonk? Did you see this? It's just like a meme coin rush. And I have no problems with that because people look at it and they say, well, at least I can get in, if besides a VC who goes into a seed or a pre-seed round and gets a bunch of tokens for discount and they dump on me. At least with meme coins, I have a shot. Now, most of these are going to go into zero, but it's amazing how people just talk about that and that's it. But I mean, at some point, everybody, we're going to have to get back to the basics and say, what does these things actually do? And what does Bitcoin actually do? And what does smart contracts and layer 2s and Ethereum actually do? And how can it actually help us progress to the next thing that we actually want to be? So I think right now you're seeing a lot of institutions and a lot of people are getting into the meme coins, which I got to tell you, I mean, it's lucrative for some, but it's not lucrative for most. And right now it's great and everybody's having a good time, but you're in a casino. So I want everybody to realize that it's all a big gamble. At some point, we'll shift and we'll pivot. And like Guy was talking about, we got to find the ones that are actually the big ones for the AI, for the DeepIns, for the Web3s. But I don't think we're there yet. And as far as institutions coming in, I mean, we'll see. If the 4-year cycles still stay intact, we've got a long way to go until the end of 2024 or early 2025.
Yeah. Guy, saying like, what are your thoughts about this? Still, is it more or less just an institutional driven rally at this point? Or, is it also driven by retail, but they're just not engaging, in sort of the social media aspect like they were in 2021?
Well, I think it was Van Eck, or if it wasn't Van Eck, it was one of the spot ETF issuers, came out and said fairly recently that that most of these ETF inflows were actually coming from retail, which surprised me a lot because we have had there's been lots of news about institutions and even I think we talked about it the other week, didn't we? The state of Wisconsin, like even they went in on it. So and it would kind of make sense. It would make more sense if it was institutions. Pushing up the price of Bitcoin, but not wanting to play really with ETH or certainly not in the altcoin market. But I guess if Van Eck is right, and it is mostly retail accounting for ETF inflows, then I guess that takes the form of retail, of if you like, more traditional-minded retail investors who are looking to slightly diversify their portfolio and maybe allocating 1 or maybe 2% to Bitcoin via the ETF, which was kind of, which is kind of the point, isn't it? Like that's what these ETFs were really designed to do, obviously to help onboard institutions. But I think what was really being talked about a lot was the fact that all these people, all these American everyday investors would finally have access to Bitcoin in a safe way. And that, that Van Eck seems to be suggesting that is in fact the case. So the question then becomes, like, are these people going to be satisfied with just holding Bitcoin, or will their interest be Will their interest be piqued, to go into ETH? I mean, obviously now ETH will soon have an ETF. So will they be interested in that, and will the rotation then happen? And I think we've talked about this a bit, and it's just not clear. I think a lot of people will probably limit themselves to Bitcoin. That's as much risk as they want to take in this market, and who can blame them, really? So. And I mean, I looked it up earlier on today, and yeah, the social metrics, as you say, Ben, are really, really bad. Trading volume on exchanges is down as well. Like Coinbase's trading volume in Q4 of 2021, which is obviously the peak of the last cycle, was $177 billion. In Q1 of this year, obviously this year has been pretty good in comparison to the previous ones. It was $56 billion. So that's a 68% drawdown. So retail is definitely not here in strength. I also wonder whether think companies, sort of more crypto aligned companies like Tether, have said that they are regularly buying Bitcoin. We don't know how much, but they say they are. MicroStrategy obviously buys the dip every other day. I think there was news of a healthcare company adding Bitcoin to its treasury. There are lots of institutions who do seem to be diversifying to it as well. What I wanted to ask you, Ben, was do you also have figures for podcasts? Like, I know because it's fairly sort of easy to check YouTube views and Google searches and things like that. But I've always been kind of conscious that the crypto media side of it, if you like, is very much is very much two-sided. Like you've got the likes of us doing it on YouTube. Obviously everyone's on Twitter, but then there's the whole sort of podcast side of it as well. The On the Brink guys, the Bankless guys, Peter McCormack and people like that. Do you have any idea what their figures are like?
I think I track their YouTube views because a lot of their podcasts I think also get uploaded to YouTube as well. But
yeah.
No, I mean, other than YouTube and Twitter, I used to track the stuff on Reddit, like, new subscribers to subreddits and comments on various cryptocurrency subreddits. But then they basically changed it, and like the API for Reddit, they've monetized everything. So I'm like, I'm not gonna pay a ton of money just to know how many people are commenting on the subreddit. But yeah, no, I mean, I haven't really followed it elsewhere. And I mean, by the way, you're preaching to the choir when, saying things like, people just want to stick with Bitcoin and they're kind of over everything else. I mean, that's where I have been for the last 3 years, right? I mean, that's why I've just kind of preached on this Bitcoin dominance train. I'll just stick with Bitcoin, and I tip my hat to those that are making a fortune in the altcoin market. But it is certainly. I think the way to think about it is that Bitcoin helps to just like preserve what you have, right? It beats inflation, generally speaking. It preserves what you have. If you're in some crazy wealth creation mode, obviously the altcoin market is going to be a lot more appealing.
But Bitcoin beats everything apart from Nvidia.
Right. Well, and the thing is like there's a chance that Bitcoin could beat Nvidia again in the future, right? I mean, like, I wouldn't be surprised if, 10 years from now, Bitcoin's returns are better than Nvidia's again. Because I mean, these companies kind of come and go. I mean, there was Cisco 24 years ago that was number one. I actually read an article, and this is crazy, and I wonder if we're going to see a very similar article. The article said, I believe it was in early 2000. It said Cisco overtakes Microsoft to become the number one company by market cap. And 24 years later, Microsoft is number one and Nvidia is now number 3, right? So it's not that far away from seeing almost an identical headline. I mean, I think a 10 to 20% move by Nvidia, which, I mean, it can do that any given day, right? Would basically bring on that same headline. So I don't know. We'll see. It has been a remarkable run, but I would actually say over a long enough period of time, I would guess that Bitcoin would sort of take that spot back. But
You know, one thing that's a pretty good metaphor. If you take a look at all the different price action for different altcoins, that people look at like a chain link or like Ethereum at some point and say, hey, there's not much price movement, so it's a crappy coin. It's not going to do anything. But no one really knows what's going on behind the scenes. You know how much work Microsoft had to do behind the scenes to regain that, to branch out the partnerships, the building. Amazon did the same thing. Their stock market or their stock went to the toilet. But it was Jeff Bezos put out a letter to his shareholders like, look, we just acquired all these different warehouses and we're moving forward. So I think it's good. I think that as time goes on, we'll see which ones are the winners. And that's why you can't ever say like, well, this one sucks just because it doesn't move. It's just, it's building, and we'll never know what's going on behind the scenes.
Right. By the way, guys, if you have any questions, go ahead and leave them in the chat, because we're about to get to our last question, and then I'd like to just take a few questions from the audience. But the last question that I had for you guys, and I guess I'll just ask Guy this one, unless Rob wants to take a stab at it. But it's basically that the ECB, the European Central Bank, has advertised a rate cut in June. Now, this is something we've been talking about forever, right? I mean, like, when are they going to cut rates? And obviously you have the Fed, you have the ECB, and there's obviously some other central banks too. But the ECB cutting rates, you know, is it a precursor to the Fed cutting rates? So far, for the last couple of years, they've basically been in lockstep with one another, right? Like, you know, they're not really, they haven't really deviated too much. But now we're seeing completely separate things. I mean, you have the ECB, where all the members are coming out and basically saying, yeah, we're going to cut in June, barring some really bad inflation print between now and then. But then you have Fed members saying the exact opposite. I was actually reading just yesterday, one of the Fed members actually came out and said rate hikes are not off the table, you know? And then another person said that he wants to see several months of good inflation data before they would even consider cutting rates. Now, the counterpoint is that in June of 2019, the Fed said they wouldn't cut rates until 2020, and then they cut rates the following month. So, you know, it's hard to know if what they say is true. What they've said for the last 2.5 years has been true, even though they're like everyone's been fighting them every step of the way. But what's your view on this? Like, why do you think the ECB is the European Central Bank? Why do you think they're going to start to cut rates, but the Fed's not? Guy?
I think probably it's because Europe is in, and by Europe I mean like the EU rather than the sort of continent as a whole. But the EU is in way worse shape than the US is. I think this is, you know, we focus so much on the US with good reason, but actually the US is doing really well in comparison to almost everyone else. You know, China is really struggling. Japan is really struggling. The UK is really struggling, and the EU is in a boatload of trouble. So I think probably they are desperate to stimulate as soon as possible. I mean, the EU's largest economy is Germany. Germany, I think, is still in recession. Its economy is in huge trouble because it's failed to move with the times. I think, you know, Germany's been long focused on sort of heavy industry, you know, famous for building cars and chemicals and steel and things like that. And as such, Germany has no tech sector to speak of, as I understand it. So not only is it in recession, but its economy is sort of ossified, I guess, for want of a better word. You know, it hasn't diversified. It's not modern enough. And that is the EU's biggest economy. And the EU itself is made up of, you know, a number of traditionally strong and fairly stable economies, France, Germany, you know, some of the Scandinavian countries, the Netherlands, things like that. And then a whole load of absolute basket case economies, you know, Greece, Italy, you know, Spain and Portugal, I think, to a lesser extent. So, and that's kind of always been the EU's big weakness. You know, it's the fact that these underperforming economies have to be sort of propped up by these larger ones, and that's led to a whole load of conflict. And that was, you know, a big part, I think, under the surface of why the UK elected to leave the EU. That's another problem that the EU has. I mean, it's proving to be a problem for the UK as well. But, you know, the EU has also lost a major, you know, the world's 6th largest economy or whatever it is still. So yeah, Europe is in real trouble. And then if you factor in, I mean, it's experiencing similar problems to the US in the sense that there's a big migration crisis.
Yeah.
So that they're having to deal with that, but they're also having to deal with a war on its doorstep that only seems to be getting worse. And like there is a lot of concern now in Europe that this is gonna get worse before it gets better. Like places like Poland and the Baltic states are rearming as quickly as they can. So money has to be found to go into defense. They're also suffering. Europe isn't energy independent like the US is, and was hit hard by the fact that it can no longer sort of officially source oil and gas from Russia, although I think unofficially it does still because it has to. So yeah, the short answer is I think Europe is in a lot of trouble and it needs to stimulate as soon as possible. I don't think inflation in parts of Europe is particularly bad. I think they have managed to sort of largely get that under control to some degree. It's worse in some places than others. But yeah, I think Europe just it needs to get its economy going, whereas America's is kind of chugging along in comparison, at any rate.
There was a call recently, I think. Did you guys see all the stuff on Twitter? I don't know if I'm ever going to be able to just call it X. Like I feel like it's just Twitter.
It's Twitter. It's Twitter.
It's Twitter.
Twitter, damn it. Yeah,
I'm that old man that just like refuses to like that's how you know he's a millennial because he calls it. I mean, did you guys see all like the comments about like how everything's gone up so much? Like the price of like a Big Mac is up like so much, and there was like an earnings call or something recently where the CEO was like, no, they're not up that bad. They're only up 40% more than they were in 2019 or something on average. Like their average menu item is up 40% since 2019. But I mean, it really is. It's sort of like the invisible tax,
Yeah.
It just kind of slowly chips away, and it's almost like you don't necessarily consciously realize it all the time, but like it's happening, and slowly but surely the purchasing power is slowly dwindled. And so obviously that's why we sit here and talk about all these assets, because that's one way you can try to stay ahead. But one person asked a question. I just pulled the screen out or the chart up because someone said, and I haven't calculated it out recently, but they said, is it true that Bitcoin hasn't hit an all-time high when adjusted for inflation? I'd have to go back and recalculate it. I remember looking at it late last year, and it was like 79K or something would have been sort of like the inflation adjusted all-time high. And I just pulled there's a chart on TradingView actually that calculates out the S&P 500 inflation adjusted by month. And you kind of see something similar, right? Like, we still haven't actually reached the 2021 highs when accounting for inflation. So you're likely looking at something very similar with Bitcoin as well. But with that said, they're also not that far away. I mean, the S&P is only, about a 6 to 7% move away from a new all-time high, even when counting for, or even when adjusting for inflation. So I wanted to go ahead and take that one since I had that one up. Rob, this next one is for you. What stands out the most at Consensus this year?
The participation and the amount of people. It seems like last year and the year before, it was pretty dead. And not super dead, but I mean, they had speakers and everything else, but people are more engaged and they're looking for more things. And I honestly, guys, I don't really go to Consensus to the main floor. I usually just kind of take meetings and talk to these different organizations. But when I went there, I went there to go see a couple friends, and then also I talked with Gary Cardone. And when I was on the floor, I could see it was a little bit more like natural exuberance about people getting into it and talking about it. So that was, I think, a pretty big positive on there. And as far as like anything else, there was, I mean, there's good speakers, but I didn't see like any. But one of the things that I would say is that I didn't see like any major innovation of someone like, hey, we have this great product coming out. It's kind of like the same thing, and people are just building and making it better, which I kind of actually appreciate. So.
Yeah, no, I mean, it's always good to hear kind of what's going on the ground at these conferences. Because I mean, it's, we talk about the social interest being low, but you're talking about on sort of the reverse, like, it's really crowded at the conference.
It's it's pretty crowded. And I will say, just going back to that adjusted for inflation, that was, when I was talking to Gary, that was like, we talked about that for like 20 minutes. And I think if people, like, the people don't understand, like, inflation, it's a silent tax. Maybe if we focus more on that, to teach them about how Bitcoin works, maybe it'd be better. Because when Gary was talking about it, he had a multi-million-dollar home. He sold it and put it on the Bitcoin just like a couple of months ago. And I said, why'd you do that? Because you're a big real estate guy. I mean, I like real estate, but not as much as like the Cardones. And he's like, well, he goes, first of all, that's the thing I'm actually going to actually own. And I don't have to keep paying for it. I mean, as far as like taxes go. And he goes, I think it's going to massively appreciate over time. I think it's finite. And we just talked about it. And he said, and it's like inflation. And I thought, if I just talk more about that inflation, and just, it'll naturally, people will just get Bitcoin, I think, more. I need to talk more about that and use some of the stuff on Ben's site, steal more of his information.
Last question, and then we'll go ahead and wrap it up. Does the panel think that risk assets will react more poorly to sticky inflation and stagnation in progress, or an increasing weakening in the labor market? It seems like they react positively either way. Any thoughts?
I mean, I guess, I guess sort of sticky inflation and that decline of purchasing power, again, that sort of adds up to what we've talked about in the past, the feeling that people just don't feel like they have any extra money to spend, isn't it? And obviously that in theory, that shunts risk assets to the back of the queue. It's like, there's everything else comes above them in priority. But then you get something like meme coins, which sort of ties into the sort of financial nihilism angle of it, which I think is fascinating. So, maybe a sort of contrarian view of it is that, people are more willing, that the tougher things get for people, the more willing they are to gamble, in a sense. And that is, as Rob said earlier, that is certainly when it comes to meme coins, but also, like, to a large extent when it comes to most of crypto. That's what it adds up to a lot of the time. So yeah, I think perhaps perversely people will be, inflation and a general sort of sense of hopelessness will perhaps lead people more to take bigger risks.
Yeah,
certainly seems to be what a lot of people are doing.
Yeah,
I think Powell's got. I mean, he's. Did you get at the last press conference? He was like, someone asked him about stagflation, and he was like, I don't see any evidence of the stag or the flation. Yeah. But ever since then, like there's just been there's been a lot of evidence of it, right? And everyone keeps pointing out there's the stag, there's the flation, right? Like you get an inflation print that's really sticky. We're actually about to get PCE this week, I believe. Oh, yeah. That's tomorrow? It might be tomorrow.
Isn't it today?
Is it today? I can't remember.
Maybe it's tomorrow.
I honestly don't know. I know it's either today or tomorrow. But and then there's also evidence of it of sort of the opposite as well, or the stag part of it too. So it's just kind of funny. I wonder if he regrets saying that, because literally after he said it, like that's kind of what's been coming out. Oh yeah, the PCE did come out about an hour ago, so it looks like Q1 core PCE Q1 core PCE was 3.6% year over year. Previous was 2%. Estimated to be 3.7. So it came in a little bit lower than what was estimated. But I guess I could just pull it up on my site. But I don't know if there were any other questions. Maybe one last question. I saw one. Oh yeah, someone says, "What do you guys think? AI over gaming later this year and next?" What are your thoughts?
Yeah, and I'm going to tell you why. There was an article that just came out and like I've talked to some of the gamers. Web 2 gamers still despise Web 3. They think it's a cash grab, and rightfully so, because in the back of the days, that's pretty much what it was. But there's good games out now. There's Shrapnel and there's Illuvium and stuff like that. But they hate it, and we need not one that we need, but to get those people to come over. It's that's the majority of it. So I think AI will rule the roost for a while because it's the narrative, and then Web3. But I still think it's a safe play even as we go into a bearish market because people are still going to play games. That's what I get from here anyhow.
Sure.
Yeah.
All right, guys. Why don't we go ahead and wrap it up? But it's great to have you guys here again. Next week, we will be on Rob's channel. If you're not subscribed to either of these guys, go subscribe. Links in the description below. And we will see you guys in a week. See you guys then.
Thanks, guys.
Awesome. Thanks, guys. See you soon.